Hello traders, welcome back to the channel. I am Janoy with Trading the Charts Pro, and guys, in this video we're going to be talking about some stuff that I don't normally bring to this channel, but I think it's the perfect opportunity right now to talk about some of these stuff because right now we're officially closing off 2021 and we're starting off into a new year. So this is a great time for me to come in and bring up some of this stuff that new traders specifically should focus on when you're just coming into the market, because really and truly, to find success in the stock market, you really need more than just strategies. You need more than just, okay, what to buy now, what to sell now, or what to short now. It goes a little bit deeper than that, and the reason I'm able to share this stuff with you is because I've been in the market now for around 7 years, and I've observed that when I first started out, the reason why it took a little bit longer to find success was because there was some missing pieces. Though I had a mentor and all of this stuff, I've learned that there's still some structural stuff that not everyone is willing to share with you, because sometimes people find success, but after they've become successful, you know they want to share the success, but they start to have conflict of interest, right? Because they're successful and they have a plan that they want to go to XYZ, or they want to go further than where they currently are after becoming successful. And 9 times out of 10, in order for them to make progress from where they are, they will create a service, create a product or something like that to sell to people that want to get to where they currently are right now. But 9 times out of 10, again, they start to have that conflict of interest where do they really share with you how they got to where they are right now, or do they prioritize selling you whatever it is they're selling to get to where they're trying to go? So that will most of the time prevent people from giving you the true direction, the true roadmap to get to the success that you are destined to try to get to. All right, so in this video, I'm going to break it down. I'm going to share with you my thoughts on how I've approached the stock market and the methods, tools that I've used to navigate the stock market and to find some sort of success, whatever that may mean for you. All right, so new investors, it's a fresh year 2022. So if you're just starting out, this is how I'm thinking that you should structure your financial plan to navigate the road of success ahead. All right, so we're gonna dive a little bit deeper into this thing, and I'm going to bring up some pointers, right? Boom, that I want to be covering here today, right? So let's jump into it. All right, guys, so if you're just coming into the stock market today, day one, right, these are some things that I think you should focus on. Number one, you need to be thinking long term. Though you are seeing active traders make 10, 20, $15,000 per day, that is not where you should be looking to start, and it is really impossible for you to start out at those places. All right, because it takes a lot of experience for you to be able to start make that money. Also, it takes a lot of capital, takes a lot of risk management, and it takes skill. Skill is something that really takes around 2 years, a year, 2 years to really develop in the market. And when I say skill, you have to be able to identify patterns. You have to be able to good risk to reward ratio. You have to know why you're taking a trade. All right, so this is why I think when you're starting out, you have to take the long term into perspective, right? So the first thing I think you should be doing as a new trader is you need to open a long term account, right? Fund your long term account, and in your long term account, the only thing you need to be focusing on as a new trader, new investor, is something like a VTSAX, which is the Vanguard Total Stock Market Index Fund, right? This fund yearly, give a return of around 13%. There are years when this also yield a 20% return. Then in that same group, you can also look at things like VTI, which is the Vanguard Total Stock Market ETF, which is an exchange traded fund. You can trade this like a stock, versus VTSAX, which is a mutual fund where you don't have as much flexibility in trading that one, but those are two. In addition to that, you have VU, which is similar to VTI, except VU is tracking the S&P 500. It's an ETF as well, but VTI is a little bit more diversified. All right, so VTI has a little bit more mix of smaller companies rather than VU, which specifically only tracks the S&P 500 stocks. All right, so as a new investor, you should open a long-term account. This is my opinion. This is the way I should have been looking at it when I first started out, because in your first year to 2 years, guys, I'm telling you, the only thing is really gonna happen is you're gonna spend money, you're gonna lose money, and you're gonna be wondering, yay, where did I go wrong? Well, you go wrong in the sense that if you open a long-term account during the process, the 1 year, the 2 year that it really takes to learn how to trade the market, you will have an account working for you in the background that is generating an average of 10% return to a potential 20-25% return on an annual basis based on what the market conditions are. All right, so this is why it's important to have this account set up in the background. You're contributing to it monthly, however you can. Start it off, fund it, and contribute to it as much as you can, and let it grow in the background while you go out now, you go create a second account, and this second account should be your Roth IRA. Why is a Roth IRA important after you have already have a long-term investing account? Well, your Roth IRA is important because this is an account that will help you to generate or grow your wealth tax free. All right, so once you put in that money inside an account, is all the profits will be deferred until you're around 59 and a half. When you start to withdraw, based on your accounting strategies, you will be able to save all the taxes from now until whenever you're 59 years and a half. Right, so the thing about your Roth IRA is this account is capped. You can only contribute around 6,000, excuse me for that typo, 6,000 to 7,000 on an annual basis. So if you can get your 6,000, 7,000 based on your age in right around January, February, you forget about it and you just let that account accumulate and grow until the next year you do your next contribution. Right, so as a new trader, day one, you want to focus on long term. Then you want to get your Roth IRA, which is your tax deferred account set up. And then, guys, you want to start working on your credit if you do not have credit. Now, we're talking stock market. Why is he bringing up credit score? Guys, credit score still matters, because what I'm about to tell you is that when it comes to success is something that it doesn't really just lie in one place. So you may start off trading the stock market, but as you start to do well in the stock market, you realize you're positioning yourself to do well in other places, right? So you build up your credit score. Your credit score will give you an opportunity to purchase a piece of real estate. Guys, when you purchase a piece of real estate, you can leverage that piece of real estate to go buy another piece of real estate. What does that mean? It means that altogether you're thinking as an investor, and an investor doesn't only think the stock market. All right, When they speak about being diversified, you don't only want to be diversified by owning a VTSAX, which has a little bit of everything. You also want to be diversified out of paper assets. All right, paper assets are anything that relates to the stock market, because all of this is technically on paper. So when you start to diversify, you may be looking at real estate, all right, or a business. So get your credit score up, because success really doesn't lie in one place. When you start to become a successful person, it really start to flow around to everything that's around you, and you don't want to have any limits. So work on your credit score. Day one, planning to be an investor. Day one, starting out as an investor. All right, guys, the next thing that I want to uh, guide you to focus on day one as you approach whether the stock market or you approach investing on a whole is you have to create more streams of income. A lot of the guys that you watch, whether on YouTube or on the podcasts, you see them on the radio, on the TV, they are successful. They're telling their story to you, showing you that they're successful. The way they do that, guys, is by creating multiple streams of income. Every rich person has multiple streams of income. So if right now you work a job, try to create a service on the side, right? Try to create a product on the side. Try to create a content on the side, something that has the ability to generate additional cash for you. Why is this important? It is important because if you're really planning to become a trader, one, funding is really what separates you. So even these guys that you see make crazy money, big trades, the only way you can really afford a trade that turns around 100,000 is if you have the capital to make the initial trade, which may cost 50,000. You see what I mean? So if you don't have a $50,000 account, then you don't have the opportunity to play in that arena. You see what I mean? So creating multiple streams of income will start to help you to grow this account faster. And when we switch over to getting a little bit more deeper with it, right? When we say deeper, we're now talking about managing your trading business. All right, so when you're managing the trading business, you have a Roth IRA, you got a long-term account, and if you truly believe that you want to become a trader, now you have a short-term account, right? In order to fund all of these, you may be working a job right now, but you create a second income stream, whether from service or from a business, and these can help you fund your short-term account faster or grow it up over PDT, where that's a $25,000 account, and once you're over PDT, you're a little bit more flexible. Two, you can grow your long-term investing account to a place where you're emotionally comfortable. When you're emotionally comfortable, guys, you trade better, because now when you go in a trade, you're not going in a trade with the thought that, hey, I need to get this money back out of this trade before my rent is due, before my mortgage is due, before my car payment is due. Therefore, if you go into the trade and the trade start to become volatile, you're not losing your shirt, all right? Because things is just not going the way you initially thought, having it working out. And 9 times out of 10, you will lose in a trade because you're not able to sit still and be patient. Yes, sometimes some trade is not going to work out, but when you have built up a Roth IRA, you built up a long-term account, and now you have a short-term trading account, guys, you are going to take risks in your short-term account more easy. You're going to take better trades. You're going to be able to take a trade that may not work out, but you are able to be more patient in that trade, right? Higher risk, higher reward. The only way you can get to the place where you can take high risk, high reward opportunities is if you structure your entire business in a way that, hey, if this one trade doesn't work out, I am still good. Why am I still good? Why am I still good? You're still good because, guys, you have laid the plan out, right? You have laid the plan out in the sense that you have a backup. What is your backup? Now your backup maybe your long-term account. So if you blow out in the short term, you got a long-term account that can help you. You can go and pull that 13% out that you've accumulated over the last year and fund or refund or fund again your short-term trading account to keep on going. All right, so guys, I hope you did find some value in the way I've laid this out. Day one, if you're just starting in the market, guys, don't think about going to trade options. Don't think about trading crypto. Don't think about day trading. Lay out your solid plan. What does a solid plan look like? It looks like a plan where you're thinking long term first, because at the end of the day, it will take you 1 year. It may take you 2 years. It may take you 3 years. It may take you 3.5 years to really get to the point where you can trade comfortably, you can trade profitably in the market on a short-term basis, if that's what you're going after. The only thing that can help you are, let's put it another way, if it's going to take you 3 years to fully learn how to trade the market, wouldn't you want to be able to make some money in the market during that 3 years while you learn? That's what I thought. I was never thinking like that when I first started, right? So let's say it took me 2 years, which it took me really 2 years to become fully competent in terms of really reading patterns and know when to get in, know when to get out, and know when to just sit on the sideline. But during that 2 years, it was just pain, sweat, tears, and frustration, right? Because I never thought that, hey, think about the long term first, invest for the long term first, and then try to, do your thing on a short term basis. All right, guys, as it relates to additional income, do not go and try to get another job. You already got a job. You have to start thinking in a way that how can I make money without actually, being tied to whatever it is I'm going to do for 8 hours. You got to think beyond that. I feel like that is an old method. So now, we have to think with the time that we're in. All right. So I hope you find some value in this one, and I'll be coming out with another video soon. So, if this brought value, hit that thumbs up and show your comments down below. I'll see you in my next video. Thank you for watching.